What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is July 7th of 2025. Well, folks, I hope you are having a fantastic day wherever you are, and it feels good to be back here on the DataDash channel because we have a lot to unpack in today's video. We're not only going to be doing a deep dive in regards to Bitcoin's price, as we've been seeing inconsistency and chop around the 21-day moving average. I want to talk about what we need to look for in regards to price developments, but beyond that, we also need to, in comparison, take a look at the data at the ETF inflows, as well as MicroStrategy and other Bitcoin treasuries, and what this essentially means in regards to the development we've seen in price and the supply and demand equation that's really going to help us to determine where Bitcoin is going over the next couple of months. And outside of that as well, I want to spend some time on altcoins, talking about, while at the moment we aren't seeing any clear uptrend now, how we might be in a value zone where if certain conditions are met, we could see a significant rebound in altcoins. And last but not least, of course, talking about the broader macro scene, talking about stocks. So we're going to be doing a whole deep dive into Bitcoin in the short term, long term. We've got a lot to unpack here in today's video. If you happen to enjoy it, consider dropping a like, grab a cup of coffee, stick with me here. You guys won't want to miss it. But before we dive into all that, I just want to share a few quick updates with you guys. First off, if you haven't already, as I know many of you are familiar with me, you've watched me over the last couple of years, if you haven't already checked out some of the content being put out on a weekly basis from our new trader, Paul Sampson, then I definitely recommend you guys take a look at his content. Paul is just as seasoned and veteran as I am in regards to trading in crypto, and he's got a really sound process for not only mitigating risk, but finding real actionable trade setups in the market, utilizing pivot lines, which are essentially averages over price, similar to kind of what we do in regards to RTA. But beyond that as well, he has really good foundations that are going to help you, especially if you're looking for more short-term trading in the market rather than more longer-term swing trading setups or long-term investments like I do. He can really add a lot of value in that regard. So I highly vouch for Paul here. I definitely recommend you guys check out some of the content that he's putting out. He put a great upload just back a couple of days ago, and he'll be having some more uploads later this week. And outside of that as well, if you really like Paul's content or you like what I'm putting out here in the DataDash channel, maybe you might be missing some of the frequent uploads that I was putting out here on the DataDash channel, and you want to be able to keep in touch with what I'm doing in markets, then you guys can not only check out the Dash Report newsletter or the DataDash Traders Club, which is Paul's exclusive trader group, or you can sign up for the DataDash Pro Bundle, where you get a annual discount savings of around $228 for signing up for both. So you get both the kind of long-term setups that I'm focused on and also the more macro analysis of stocks, commodities, and Forex alongside crypto. But also you'll get Paul's trading group and Discord as well, where you get a really great community of people helping out one another and learning how to really take actionable trade setups in the market. Now, if you guys are interested in signing up for either the Pro Bundle or Paul's Discord, then in this case, you can use the discount code we'll have down below in the description, where you guys can get 50% off on your first month. It's Dash for Freedom. This is our 4th of July sales event that we have going on. So just wanted to run through all that. That's all I got to go through. Let's go ahead and kick off into the broader analysis here, guys. Now, I want to start here by talking about Bitcoin predominantly, because Bitcoin obviously is one of the broader sentiment gauges for altcoins, and I think also for risk in general markets. So over the last couple of months, really throughout the entirety of 2025, so more than half a year now, we haven't really been able to break away from this key distribution or resistance range from back here in late December and early to mid-January of 2025. So we've essentially been holding this range. Of course, we printed slightly higher levels here, as everyone would like to focus on. But at the end of the day, we really focus on having that ability to formulate a trend, to really start a new breakout to new levels, going to 120, 130K, and obviously target levels that a lot more optimistic people have around 200K, 300K, etc. That would really make Bitcoin quite interesting, right? However, in the interim, we are still struggling here at this range. Every single time we've come up around those levels, we are faced with pretty heavy distribution, significant single-digit downward days here. Now, of course, in the grand scheme of Bitcoin's history, that's nothing too crazy, but we are seeing that at this level, we are not having that follow-through of buyers, and essentially we are seeing more net sellers in the market. And I know a lot of people get caught up wondering who's selling here. Obviously, when we take a look at the data for MicroStrategy and the ETF inflows, as we'll take a look at later, you might be wondering who's selling. At the end of the day, it doesn't really matter. It means right now that there are more net market sellers than market buyers. Now, of course, there will always be a match on every side of the trade, but when I say market sell side pressure, I'm talking about people who are willing to take the best available price here, for their trade. So there are more people who are essentially basically taking the best available price to sell their Bitcoin than those who are willing to pay the best available price to buy Bitcoin. That's what actually leads price and trend direction. So again, this inconsistency at the 21-day moving average, as we highlighted earlier, is already a warning sign of this. This is exactly what we saw back here in Q4 of 2024 into 2025. We also saw it back here as well in March of 2024, when you started to break away from that clear trend acceleration where the 21-day was providing bid side support, and we started to essentially chop around that moving average. The longer we did that, the more inconsistency in the trend, the more uncertainty, and therefore likelihood of a correction. And we were right in those occurrences that essentially when we got that, we were going to see a pullback. We called that both times, focusing on that 21-day moving average, right? And in the dashboard, we'd also called for a target level around 75,000, which we did come to, which is pretty cool. So I again want to emphasize here, the longer that we can't break above this range here and we keep chopping in and out of the 21-day moving average, that is a warning sign here. And I want to go ahead and spend some time to talk not only about cycle analysis, but also talk about the data at the end of the day that really determines where Bitcoin's going. And that has to obviously do with the cycle analysis here, but also the inflows from the two major buy-side sources, which are the ETFs and MicroStrategy and other Bitcoin treasures. So let's talk here a little bit about cycle analysis, right? Obviously, there are all types of different theories about the 4-year cycle. There was previously the expanding cycle theory. I don't want to get kind of lost here in trying to think that Bitcoin is going to follow some exact process. I think we've talked about it plenty of times here on the channel that the halving event has become a weaker and weaker determining factor in Bitcoin's price, as while it is reducing the inflation rate by half every single 4 years, that inflation rate every single year as a part of Bitcoin's overall supply and the supply and demand equation that really determines price is getting smaller and smaller. We're talking about a percentage to fractions of a percentage and reduction in the inflation rate versus back when we were talking about double-digit inflation down to single-digit. There was big changes, right? So when we really think about this on the longer term here, we really just need to take a look at this and try to gauge what's realistic here. We know we have declining bottom to top accelerations with each cycle here. And along with that as well, that cycles, generally speaking, historically have been anywhere from around 25 months from bottom to top here to 34. Some may argue that they've expanded a little bit each time, right? So we have to keep that in mind, that also might be a possibility. But generally speaking here, if we can gauge anything, we can see that we have declining returns and maybe similar, if not slightly lengthening cycles, okay? Now, when we take a look here at the decay in multiples for bottom to top accelerations, we can see that we had a 62,000% acceleration. In the next cycle, we had a 12,000% or almost coming up to 13,000% acceleration and down to a 2,000% expansion. This time around, from bottom to top, so really those kind of capitulative lows from FTX, from Celsius, from all the major participants, and really the over leverage and risk taking and the lending and borrowing space in crypto, Three Arrows Capital, etc. Those lows that were printed were essentially around $15,479. We are now trading again towards those all-time high range around 108,000, 109,000, give or take, which is a 615% return, roughly speaking. Now, with each and every one of these cycles, we generally have found that the multiples decay by a factor of 5. So essentially, we go from making around 60,000 here in this cycle down to 12,000. And this cycle previously in the 12,000 range, coming down to 2,000. Right now, what we have seen here, this 615% acceleration, is already surpassing that decay multiple. Essentially, we are beyond what historically we would have seen here, in terms of the expectation for returns in this cycle, right? We already expected the returns are going to decay, but historically speaking, this should have probably been no more than about a 400% expansion. We're now up to 650%. So this has already been a pretty optimistic rally, historically speaking. So that's one thing to keep in mind here as we kind of start to stagnate around this range here. Not to mention, from bottom to where we are now, we've already seen about 33 months of price action. This puts us pretty much on par here in the next month or so to have the longest expansion we've seen in Bitcoin. And I think all this plays into what we've talked about here, the kind of decaying effectiveness of cycle analysis, that Bitcoin is going to be more of a predictable asset long term. It's going to be more in alignment with the returns of equities and other assets, perhaps maybe slightly outpacing it long term, but again, still with probably a bit more moderate downturns than what you're going to get in traditional assets like equities. Right? Because at the end of the day, while Bitcoin benefits from not having an underlying business at the end of the day and not being directly tied to the economy, it is also a purely speculative instrument. It is one that capital flows to during good times, and it is one of the best performing assets during good times and one of the worst performing when things get bad. Right? So this is important to understand that Bitcoin is a money debasement hedge, not a inflation hedge, or more specifically, this asset that does well during bad times, at least historically speaking. That's one of the big points I would really kind of drive home. Okay, so we've taken a look at this in the short term, we've taken a look at the long term, and we already see here that we're already kind of in the later innings here of an expansion, historically speaking, if we can pull anything from cycle analysis. But here's the real kicker I want to get to here. Okay, I want to spend some time to talk about what really matters at the end of the day and how you can really dissect what's going on in terms of price and the data. MicroStrategy, if you look at the headlines for the ETFs on MicroStrategy, things don't really look bad. There's nothing that really looks scary in terms of the inflows. The outflows that we saw back in kind of March and April, with the kind of risk-off sentiment caused by, I think, a lot of the tariff concerns, and also just the fears that we might be entering into a recession or a slowdown in markets, name it whatever risk you will, right? But if we look at the actual data here, MicroStrategy, albeit it's at a slower rate, has still been ticking up here. It's still finding some money under the mattress, either through being able to dilute its share base by basically issuing new shares to go out and buy Bitcoin, or issuing new convertible notes, borrowing capital to go out and buy Bitcoin. So far, it's still chugging along here, right? And along with that as well, if we take a look at the ETF data, between the close of May and the close of June, so basically a month of data here, we can see that we added, roughly speaking, around 42,000, 43,000 Bitcoin in new ETF purchases. So this all looks pretty good here. I mean, if you just look at it from a visual perspective, like, this isn't sounding the alarm bells. It was obviously bad to see the outflows. Sorry, I misspoke a bit. It was February and March that we saw these outflows. Right? Obviously, that was bad to see that we had a net outflow of over 40,000 and then 9,000, almost 10,000 afterwards. But we've gotten back on track here, right? Albeit not as explosive and as exciting as before, but still, we're seeing upper double-digit tens of thousands of Bitcoin being purchased every single month, right? So not terrible. And along with that as well, MicroStrategy acquiring Bitcoin, the global ETFs really kind of unchanged. So really you can just kind of look at the US data usually, but of course it is good to get the global picture here. Again, a net increase here, again, that kind of 40,000 BTC range. So if we take a look here at MicroStrategy and other treasuries, you can see that that number's still ticking up here. Nothing looks terrible. There's no significant outflows of these two. So what's the real kicker here? Why am I bringing up this data and coming at it with a bit of caution and concern if the data looks quite nice here? Well, this is one I want to bring to your attention, guys. We have been in a period of time where the ETFs have continued month by month to stack tens of thousands of Bitcoin. We are in a scenario where Bitcoin treasuries, from MicroStrategy to Metaplanet and all these new players that are copying the strategy or MicroStrategy textbook of diluting their share base, buying Bitcoin, kind of serving as a de facto Bitcoin ETF, or issuing convertible notes to credit markets and being able to use that to finance Bitcoin purchases, and then of course be able to pay that principal down at a later date. Right? While all of that is going on, for the last 7 months, more than 7 months here, really going back here in December, we have not been able to really make a significant trend in Bitcoin's price. And more importantly, we had a period of time where Bitcoin came down here to 76,000, right? So what I want to bring to your attention is just kind of viewing it from a high-level overview, because if we take a look at this data and we look at price, so we have a range now of 7 months of data where we can see how much was acquired And essentially, if Bitcoin's price has not accelerated, this lets us really know how much sell side pressure there was. And it's basically, if you want to view it in the most simple way, it's equitable to how much is being bought in this 7-month window. So for example, we can see at the end of Q4, MicroStrategy had 446,000 Bitcoin approximately. And that's come up here into Q2 over the last 6 months. Right? We have seen a purchase all the way up, but we've seen purchases that have ticked that number up to right under around 600K. Right? So again, if we're just kind of working with rough numbers here, we could focus on the absolute final numbers here. But essentially speaking, from around 597,000 BTC from 446,000, MicroStrategy has acquired, roughly speaking, if I don't have my math wrong here, about 150,000 Bitcoin, right? Give or take some margin of error. 150,000 Bitcoin. That's not including the purchases from MetaPlanet, from other Bitcoin treasurers, not to mention Bitcoin mining companies as well that have started to take on this model as well of being Bitcoin treasurers and not just being involved in mining activity. And on top of that, we have had during that window of time, if we again just take a look at the data here, we've had an increase in the overall Bitcoin holdings in the ETFs from this window of time. Right? If we basically include the negative months here, we include what we've had here in January, I would say essentially you can cancel the month of June, here for the month of February. Essentially speaking, we've had hundreds of thousands of Bitcoin being added here into the Bitcoin ETF, right? So if we take that number, right, from the ETF inflows and MicroStrategy, you get a picture here that basically spells out that there have been hundreds of thousands of Bitcoin being sold, anywhere probably from the ballpark of 200,000 to 300,000 in this window of time. So within that 7-month window, we can get a gauge for what is the monthly sell side pressure for Bitcoin. What do we need to see in the ETF inflows as well as the MicroStrategy and other Bitcoin treasury inflows as a net whole in order to sustain current prices? And right now, that is tens of thousands of Bitcoin each month. That's just to sustain current prices. Now, if MicroStrategy and the ETFs can see a 30, 40, 50%, if not more, increase in the monthly inflows that they're currently seeing, then that can really move the needle. That can essentially get us to where we could start realistically trending to 120, 130K, where demand is outweighing supply. But as of now, we are seeing that we're just keeping up with the current sell side question. And again, I know a lot of people wonder, where's this sell side pressure coming from? And I'll tell you the simple answer, guys. It's coming from holders who bought Bitcoin or mined it years ago for a fraction of what it's worth now. And even if they still have a lot they're holding, they are probably materializing some of their gains and de-risking a bit. For every Bitcoin that MicroStrategy wants to pay $109,000 for, or a investor on Wall Street wants to buy, or someone, some maybe older individual who hadn't bought Bitcoin before is you basically buying in their retirement account or their brokerage account, there is some guy who mined Bitcoin on his laptop back before you needed ASIC miners, who was mining 50 Bitcoin blocks. There's an individual, like myself, who bought their first Bitcoin around the $1,000 range, who's now up 100x and has really been patient enough to hold. So my point being here, that there is clearly sell-side pressure here. It's not one entity, it's a market. There are lots of participants out there. It's very complex. But the main point here is that we are going to need, at a minimum, to sustain prices, tens of thousands of Bitcoin here. Maybe that changes over time. At least we've seen for the last 7 months, it's pretty consistent here that we need really substantial and sustained inflows. And any interruption to that could really spell bad news, as we saw throughout the months of January going into April. That's where we went from inconsistency at the 21-day down below the 200-day moving average, making an over 30% decline in Bitcoin's price. So this is an important thing to keep in mind, guys. Again, if you want to get the more fine math, if you want to understand the other signs that we're watching for in regards to a potential pullback, or just kind of the real risk associated with the Bitcoin treasury narrative, because a lot of people talk about it as if there's no risk associated with it. I don't mean to be all doom and gloom, but I'm here to be realistic with you guys about that risk. Then you guys can definitely check out the Dash report. This is our newsletter here on the DataDash channel. This is what I write personally, and we did an article this month on the Bitcoin treasury narrative. We talked about the real associated risks with it, the upcoming 42-42 plan that MicroStrategy plans to utilize in order to acquire more Bitcoin, and essentially how different scenarios could lead to different risk profiles and potentially a liquidation event for MicroStrategy. Again, something that sounds very far-fetched, but depending on the scenario and how it plays out, could actually be quite realistic. So I try to be neutral in it, guys. It's not me trying to badger here. I think that, to be honest, Bitcoin treasuries at the end of the day are definitely going to exist for a very long period of time. I think they will always be a part of the equation so long as it's legal for companies to go out and buy Bitcoin in the United States. I'm not here to really badger or say they're bad, but there are risks associated with it. And also, it's important to realize that we are building a growing dependence on these entities for purchasing Bitcoin. And that's going to play a bigger and bigger role in determining Bitcoin's price long term. So anyways, just wanted to let you guys know about that. Again, if you're interested in checking out that article, you can subscribe to the Dash Report at the link down below the description at datadashpro.com. That's where you guys can really keep up with me. I do my trade alerts. I also as well have a discussion group. We also do exclusive market updates, a couple times each month, where you guys can really keep up to date. We do a mid-month webinar. You guys can ask me questions. We can dive into the charts together. It's a really great community. Some real legendary players from the DataDash community in there. So definitely check it out if you guys are interested. Now, I wanted to go ahead and talk about altcoins, because I know a lot of you are obviously aware that we've traded altcoins before. We made life-changing returns on altcoins, and altcoins have just been down in the dumps, broadly speaking, for the last, really, if we look at it in the long term here, we've been kind of down in the dumps since January 2022. We've obviously had some nice accelerations. We had one in kind of mid 2023 into Q1. We made some great returns, some great trades on that in the meme coin sector. But outside of that, we've been generally, maybe with the exception of the November rally with Trump's election and the change of the administration and the sentiment around crypto, we've again just been establishing lower highs and lower lows here. However, we are entering into a range here that I would really kind of highlight is important for altcoins. This is where most altcoin cycles in the past have really kicked off, whether it be back here in January 2021, where we accelerated here into our COVID rally, here, for example, back in November 2019 into October 2020, where we saw a large acceleration in altcoin dominance, almost doubling during that window of time. And of course, obviously, the December rally in 2017. Some of you guys might remember how crazy that got. But I want to go ahead and again emphasize that we are in a range here. Whether we're talking about where we are now, maybe getting the opportunity where it goes down to 6%, where I'm starting to get a little interested in altcoins. I don't fundamentally believe in altcoins. I don't expect some massive rally. I don't ever think we're going to go back to the highs of 2022, nor up here to 14% or anything like that. But there is an opportunity here, maybe not for an altcoin cycle, but maybe a rebound in altcoins. We may be in a long-term downtrend, but as we've seen, there are periods where altcoin dominance can rebound, and it can rebound quite quickly. So I bring it here to the daily chart to try to examine whether or not we can really find anything of value. And essentially, what we've seen so far, at least in the short term, is that there is no clear breakaway. The 21-day is still holding down altcoin dominance. And until that really shifts, we're not touching altcoins with a 10-foot pole. That's just my general thesis. I have no reason to touch altcoins, because if I'm not able to see altcoin dominance getting above its average for the last 21 days, that tells me everything I need to know about sentiment, that the market is not ready. Now, that could shift in a pretty short period of time, but the important thing to look for is a break above that 21-day, and for us to be able to actually maintain it as support. And we can see that there were multiple times where we were able to get above that 21-day, but every single time fading back below, not being able to treat it as support, but rather treating it as resistance again. And that to me is not a good look. Now, the lower we move here, the more eager I am, as there's more capitulation, more fear, uncertainty, and doubt, and just kind of lackluster support for altcoins. I've got more potential room for dominance to accelerate. And I'm looking more and more sharply for us to be able to start treating that 21-day as support. Well, most people aren't watching. Well, most people are not interested. So I can get in early on that trend. So my main point here being that, as we've kind of pushed sideways here for the last 2 weeks, I'm definitely keeping an eye here to see whether or not we can get some broad acceleration here. And if you want to kind of play it safe, I think getting above that 100-day moving average, paying a slight premium, is also okay too. That will give you more of a degree of confidence that we're really making the move higher. But at the end of the day, that 21 day is your friend, guys. You guys know we've kind of beaten it like a dead horse here. If you don't lean into those moving averages as kind of a guide, or you don't have some other framework that's nearly as accurate, you're just kind of going in blind here. It's very difficult for a lot of people to be able to really spot when that bottom's happening, and the moving averages can help you because it's really a momentum indicator. And in the same way, it's also a means of resistance when there isn't momentum in the market, right? We want to get above that 21 day. We want to be there when the train is moving. You want to get on the rocket ship. We want to enjoy the momentum. We don't want to just be bag holders. And so that's an important thing to keep in mind in terms of altcoins. There are a lot of altcoins as well that are in kind of the typical accumulation ranges, plays we talked about like Fetch, for example, that look quite interesting, and a whole range of other altcoin setups that are starting to kind of flash on my radar that look quite interesting. So again, we cover that in the dashboard. We have some interesting setups in this month's newsletter. But I wanted to go ahead and talk a little bit here about what's going on in terms of equities, because as you all know, my philosophy is that the macro does matter here. Bitcoin is not entirely on its own, nor are altcoins. They are in many ways directly linked to the performance of the broader asset markets. You're talking predominantly about US equities. And we can see that something quite phenomenal has happened here over the last 2 weeks. It's an interesting time to be doing this update here, guys, because not only have we recovered entirely the kind of tariff pullback that we saw, this 21% pullback in the S&P 500 around this historic 95-year long line of resistance. Again, just to kind of want to zoom out to show you guys what I'm talking about here. If you guys aren't aware of it, this has been, we'll even take it here to the quarterly chart. We can see here, this is going back to the roaring 20s, the 1920s here. So this 95-year long line of resistance that has weighed down the S&P 500, the broad performance of stocks. Again, higher highs, higher lows. It's an ascending channel. This isn't something that's per se bearish, but my point being that we would typically expect that this line of resistance would weigh down price. However, in the short term, it seems like, at least for the time being, that sentiment for equities has essentially driven us past that line of resistance in a pretty big way. Now, again, you can have some deviations here. As you can see, we kind of chopped on the upper end here and then faded back down afterwards. But man, are we seeing a massive acceleration here in terms of the performance of equities. And at the end of the day, we've talked to you guys about this, that while I would probably lean into the idea that, that historic line of resistance holds some certainty, we've been watching it like a hawk, considering that it can move in both directions here. And if we get that clear breakout here, so long as we're holding above that 21 day, there's some really solid opportunity in markets. Now, if you start to break below that 21 day, or if we pull back and we aren't able to hold on the 200 day, which is kind of our recessionary indicator, if we go back below the 200 day moving average, that's usually your sign that we're going in for a long-term downturn in markets, a real bear market, not just some flash sale of 20%, but something more around 40, 50%. Right? That's where we would have our cause for concern. But for now, markets are confident at the moment. Equities are rallying significantly. And there are a couple reasons for this here. And this kind of plays into some theories that some people, I think, on the more bullish end have talked about. But the first thing is just understand that the dollar has been weakening substantially. Since back at the beginning of this year, the dollar on the Dixie, or the dollar index, essentially an average weight against a lot of the majority of major currencies in the world, talking about the euro, Great British pound, Japanese yen, this has gone down a net 11.6%. So while I don't think this is exactly this isn't an exactly true way to say it, you could effectively say that 11 percentage points of the gain here for the broader markets is factored in by a weaker dollar. So the markets aren't technically up that much, during that window of time. But instead, they've actually been weakened a bit. And another way to kind of visualize this and what I'm talking about is if you multiply the S&P 500 by the Dixie, you can still see here in the long term, the equity markets are moving up. It's not just, again, like from the dollar getting weaker, but it is important on the shorter term time frame. While we are pressing pretty much on the S&P 500, we've pressed new all-time highs. If you factored for the weaker dollar, you can see that we're still well below where we were back in January at the start of the year, before that dollar had been weakened. We still have another 8.4% to get to that point. So this is where I do believe we have a little bit more potential wiggle room here in regards to the equity markets potentially continuing to climb here in the near term. Another thing to keep in mind as well, maybe from a more kind of bearish perspective, is that we might be forming some kind of head and shoulders here. Again, it really depends whether or not we're able to clear through this 200-day. Even if we start to move up here and we start rolling back under the 200-day moving average, that's where I'd have my cause for concern here, right? So this is an important thing. There's also other ways you can measure the S&P 500. Another way is to divide it by M2SL or other forms of the money supply. This is a chart that I've highlighted a lot before. Essentially speaking, if we take a look here in the long term, this is basically dividing the S&P 500 by the broad measurement of M2 in the United States. Again, there's also global liquidity you can measure by a whole range of other things, but the key point here is that we're getting very close to peak territory here in the dot-com bubble, but we have room to expand, historically speaking. And this is something to consider here too, that if we have higher lows here, perhaps we don't just go up to this range, we go even higher. That gives us a range where things can really get bananas. We could see essentially equities continue to outperform the base money supply by 43-45% here going into the next couple of years. So if AI automation continue to be this hot trend, if we continue to see this idea that we are just going to see a new economic paradigm, we really might break away from this long-term line of resistance into something we've just never seen before. If the dollar keeps getting weakened, that is only going to add more fuel to the fire here. It is only going to add more of a desire to speculate, to hedge against that money debasement. That is a benefit for Bitcoin. It's a benefit for stocks, etc. So I don't want you guys, again, to pick up that I'm just being absolutely pessimistic and stuff on asset markets. We're actually, for context, we're majority exposed right now to assets. We are predominantly exposed into stocks at the moment. For the last 6 months or so, since the beginning of the year, we're essentially up 40-something% here versus the broader market, whereas most indices are up lower single digits. Bitcoin is up around, I think, about 14-15%, give or take, at the time of recording. So we've been able, on our broader portfolio, this isn't some small amount, this is really the majority of my wealth here in the markets. Essentially, we've been able to outpace Bitcoin, the broader markets. We were able to really avoid a lot of the downturn from back in April, and that really allowed us to really leapfrog when there was a lot of the upside potential here. So this is a big point I've talked about here on this channel, guys, which is that there are going to be lots of opportunities here, but unfortunately, the majority of the opportunity is going to be in new plays. It is not going to be found that kind of high multiple growth where you can make life-changing returns and really make sizable annualized returns that outpace the market are probably not going to be found in Bitcoin. Right? And it's why I'm not opposed to having some fractional exposure to Bitcoin. I'm not opposed to trading it, or more specifically trading altcoins, which have a little bit more velocity and more volatility to play with. But at the end of the day, this is where really we feel the opportunity is going to be in, is these new emerging market leaders that are these kind of new categories of companies and firms and new emerging sectors that have really that ability to 5 or 10x from where we're buying them over the next couple of years and give us those really solid annualized returns, that ability to make life-changing returns. That's what we really focus on in the Dash report. And again, I think is a big point. I'd say, even if you guys don't sign up for the Dash report, which I can understand and stuff, but the main thing I'd just say is that if I could give any tidbit of advice, it's that you should really understand that the multiple decay in crypto is real. We have already been through a broad expansion over the last couple of years, putting us at risk for a potential downturn in Bitcoin and broader crypto assets as a whole. And with altcoin fundamentals relatively weak, there just isn't much of that investment thesis here when it comes to crypto, which is why we really keep our horizons broad here. We want to focus on all the opportunities that are out there and step a little bit outside of our comfort zone to be able to really make the most of our capital and our investments. So I just wanted to show that. I don't mean that to kind of show it in a bragging way or anything. It's just to show you guys, I want to show you the kind of proof in the pudding that this is how we performed over the last 6 months or so. And we're hoping to do even better, going into the later close of this year, if we really continue to see this optimistic upswing of Bitcoin goes upward to 120, 130K, if we see, the broader stock indices continue to churn higher. Again, we're keeping ourselves in check. We're realizing that this could be a short-term deviation, but our main goal is to see that momentum above the 21-day moving average. If that continues, if euphoria really sets in, and we continue to see great earnings profiles from the big tech companies, then at the end of the day, we follow the trend. So again, if you guys are interested to know my day-to-day moves, again, that's where you can get access to it in the Dash report. But as always, guys, I'll come back here from time to time here on the channel to give you guys my thoughts on the markets. I hope you enjoyed today's update. If you did, consider dropping a like. It's a great way to support the free content we put out here on this channel. Make sure, again, to go check out Paul if you haven't already. He'll help fill in those blind spots and stuff if you guys just want to come here to the channel and stuff. But until the next video, everyone, thank you so much for giving me some time out of your day. It was an absolute pleasure as always. Love getting to chat with you guys. And I hope you guys have a phenomenal rest of your week. Take care, everyone. Trade smart. I'll see you all in the next video.